if you clicked on this video, you probably want to start investing, but are unsure how to do it. Don't worry, because I'm going to tell you how I would start investing with zero experience. And after you have watched this video, you will be able to start investing immediately. Without further ado, let's get straight into it. Now, you might be wondering, why should I even bother investing? Let me tell you something. The money that you have in your bank account right now is losing value. Inflation is eating your purchasing power as we speak. And we need to do something about it. The solution is really simple. Start investing and let your money work for you 24/7 around the clock. Let's talk about compound interest also, because it is our great friend in investing. Compound interest is basically the interest that you get on your initial investment and also the interest that you get on top of the interest you get from investing. This sounds a bit confusing, but I'm trying to explain it via an example. As you can see here, I have tried to draw an example for you guys, how the amount you earn gets just gradually increases as time goes on. But let's take an example here. So, imagine you have a money tree and you plant it. That money tree gives you money, but also seeds. And you plant those seeds in the ground. And those seeds grow into another money trees. And those trees also give you seeds. So you're getting gains on your gains, basically. And at the end, you have a bunch of money trees that are giving you money and seeds. And let's go to an example calculation over here. Let's say you invest $100 per year at the 5% interest rate. After the first year, you will have $105. And then after the second year, the $105 grows into $110.25. So the original $100 is getting $5 interest, and the $5 interest you gained is now also growing, and you get 25 cents from that initial interest. And after the third year, you will get this much, because also the 25 cents grows here. That is the interest. Compounding picks up speed fast the more time goes on. And in the beginning, there is no big difference between the contribution and the future value. But as time goes on, the difference is going to be drastic. That is why they say that in investing, time is your best friend. And now if you're wondering, when should I enter the market? Let me tell you this. The best day to enter the market was yesterday, and the second best day is right now. So do it. Start investing and getting those compound interest profits. Now, let's talk about the type of investments you can make. Over here, you can see some that I have chosen. There's many more. I could not possibly cover all of them in this video. So I have just picked the most popular ones. There's crypto, there's gold, there's bonds, there's stocks, index funds, real estate, hedge funds, ETFs, and stuff like that. But in this video, because this is made for beginners, we are going to make a deep dive on index funds and stocks. Okay, let's take an example. This round pie over here is the Apple Corporation, and you buy some Apple Corporation stock. And when you buy the stock, you get a little slice of Apple. You can think about stocks like that. You get a part of the company in exchange for your money. Now, let's take an example of index funds. For example, S&P 500. When you buy S&P 500, you don't just buy one company, but you buy multiple companies. And that's how you diversify your risk. So if one company goes bankrupt, all of your money is not gone. If I was a beginner, I would only buy low-cost index funds. And I would not try to pick any individual stocks. Of course, you're welcome to do so, but this is just my opinion. Now, let's talk about the types of investing accounts and the brokers you can open these with. So, let's start with the accounts. And this is USA specific first. So, the 401k is a retirement account. And if you withdraw money from it before a certain age, you get penalized. In the normal 401k, the contributions are done with pre-tax dollars, and in the Roth 401k, contributions are done with after-tax dollars. In the normal 401k, you can reduce taxable income by the amount you contribute, and in the Roth one, there's no income tax benefits. The biggest difference is here. In the normal 401k, you get taxed when withdrawing money, and in the Roth 401k, you pay no taxes when withdrawing money. And in the both of these accounts, your investments grow tax-free. And personally, if I would go long-term, I would choose the Roth 401k. I should also mention about the 401k that if you're under 50 years old, you can contribute $23,000 per year. And if you're over 50 years old, you can contribute $30,500 per year. And you should also check if your workplace offers you 401k match. That basically means that your employer matches your contributions up to like $5,000. That means when you invest $5,000, you actually get $10,000 because your employer matches it. Moving on, this is USA specific still. There's IRAs and Roth IRAs. IRA stands for Individual Retirement Account. And you can contribute, if you're under 50 years old, $7,000 per year. And if you're over 50 years old, then you can contribute $8,000 per year. As we saw on the 401k and Roth 401k, the normal IRA, the contributions are done with pre-tax dollars, and in the Roth IRA, contributions are done with after-tax dollars. And in the normal IRA, you get taxed when withdrawing money, and in the Roth IRA, you don't get taxed when withdrawing money. I would also choose personally the Roth IRA in this situation, because we're trying to play the long game and get that compound interest building up as time goes on. Now, moving on to UK specific, there's this thing called ISA in UK. It is an individual savings account, and the contributions are done with after-tax money, and you can contribute up to £20,000 per year across all ISAs. There's many ISAs, I'm not going to cover them, but you can look up that information on the internet, and you pay no taxes when withdrawing money from these. If you're from another country, check if your local government offers some tax benefit accounts for you. If you're from US, you can use Robinhood or Fidelity. I have heard that there's Trading 212 in UK, and personally I'm from Finland. I use Nordnet. You can use Nordnet if you're from any Nordic countries like Sweden, Norway or Denmark, and of course Finland. And I also use Trade Republic. Now, let's get into how you can actually start investing. Now that you have chosen your provider, just fill out your information, create the account, log in, deposit money, and buy your desired investment. And as we talked about earlier, I would personally buy low-cost index funds. And make sure that you invest every month, because the consistency is key. And also, you can set up an automated investing plan so it takes automatically money out of your account when you get paid. Personally, I like to buy manually, but this is just personal preference. Now, let's talk about some common fears and questions when it comes to investing. There's the common fear that what if I lose everything when investing? Let me tell you that if you're not like investing in venture capital, that risk is really, really, really low. And for you to lose everything, if you, for example, invest in index funds, then there's a lot bigger problems to worry about, like the zombie apocalypse or stuff like that. So the old saying, you should only invest the money you're willing to lose, should be replaced with only invest money that you don't need for a while, to let it sit and grow. The other common question is, how much money do I need to start? It of course depends on the platform that you use, but most platforms let you start investing for like 10 euros per month. So you don't need to have a lot of capital to start investing. Finally, let's talk about an alternative investment. It is quite good in my opinion. Investing into yourself, like buying some coaching, taking some online classes, or hiring a mentor. Because the skills that you learn cannot be taken away from you. Mark Cuban once said that if he lost everything, he would get straight back to work. He would get a job in sales, because that's his unfair advantage. He said that maybe he wouldn't become a billionaire again, because it requires some luck, but at least he would be a multi-millionaire. So, use your own unfair advantages to your advantage. Maybe you're good at public speaking, or maybe you have an influential network. Whatever it is, use those things to your advantage. I hope today's video was helpful. And if you have any questions, please leave them down below. Thanks for watching, and I'll see you in the next one.